Bitcoin's trading down, trading up, trading sideways. People are freaking out. We have contests going on between crypto enthusiasts. You got Biden trying to get Kennedy out of the running. People don't want to let Trump in, and you got Cardone and Inks here talking about the Bitcoin price. So, Chris, good to have you here on this, what is a beautiful Wednesday morning in St. Pete, Florida. You're in Texas. How's the weather over there, buddy?
We're actually cooling off a little bit. We're going to be about 70, 71.
Nice. Enjoy it while it lasts, my friend, because it will start getting warm.
Oh, you've been here, it does.
Yeah. I was in New Orleans this weekend eating crawfish with my kids, and it was already starting to get toasty.
Oh man, but I bet you it was a good time though.
It was good, and the crawfish were awesome. Poor crawfish farmers had a really rough year this year, though. They got wiped out with all the rain. Well, we didn't join the show to talk about crawfish, did we? At $6 a pound. We're going to talk about Bitcoin. What the heck's going on?
Man, for a lot of people that are new, it seems like it's the end of the world, right? You know, the mentality as it always is, price hits that all-time high and people kind of jump in and they really don't understand markets. And so they just hope that price goes up because they basically ape in with everything they have. And then it starts pulling back against them. They go, oh my God, what's going to happen? What if I lose this? And at the end of the day, we've pulled back like 17%, I believe. In terms of Bitcoin, during his bull cycles, the pullbacks, that's nothing. That's very, very minor. Previous cycles, we're looking 30-40% usually on a pullback. And we actually haven't had that at all this entire cycle off the 2022 swing low, the bear market low there. We've had, I think the largest pullback we had is around 21 or 25% or something like that. That was that 7 or 8 month period we went sideways for most of last year. But this is what we seem to be doing this time. So usually Bitcoin has a lot of these hard run-ups, hard pullbacks, hard run-up. This time around, it seems like we're doing a lot more sideways. And what that does is that energy that you get from the selling, instead of coming straight down, it's dispersed sideways. And so it gets the same effect. But if you've never really experienced that or not consistently, which we do in a lot of other markets, if all you've known is Bitcoin and what it's done, it can freak you out. Even if you've been in, for multiple cycles, because it's something different than what has normally always happened. And so, we get here and we get, a small pullback, and then people were freaking out because they were like, oh, all-time high, let's rally, let's go. Because people like me talk about larger term targets, 100,000, beyond that. But if you're a new trader coming in, a lot of times you don't pay attention to that. You're thinking, oh my God, if it goes through all-time high, it's got to go right to 100,000. And, that's just not how markets work.
Yeah. I mean, I would have thought that the people that were coming in between, call it 57 and 73, which is, by the way, just as a reminder, that is less than 3 weeks old.
Yeah.
Market moved from the high 40s to low 70s. Now we're at 64. This morning we were below 61. Yeah. You and I have been saying this for some time, I think, and I think it's just based on our length of time in markets. This market will either buy you out at a high price or it will push you out on volatility on the downside. It kind of became clear to me when, you start the beauty behind social media is you can survey a lot of people without them really knowing there's survey going on. At least that's the way I think about many of the questions I ask. Everyone was like, well, you're not going to get me out at 125. You're not going to get me out at 150. You're not going to get me out at 200. I'm going to hold forever, which is ridiculous. Okay. No one holds forever. Half the people divorce and the other half, all 100% of us die. So there's at some point you will relinquish or just lose the keys, which makes no sense whatsoever to lose the keys, to do all this work and then lose them, die with this money. To help the other 18 million holders. That's just illogical. But my point is, if they're not going to sell at 150, I've been saying, okay, well, let's see how you like a $50,000 down day at 200. Let's see how you feel about that gentleman last night that his average cost is 52 and he's freaking out, right? He's like, hey, I'm going to sell as soon as I can. His time horizon was not highly defined, and the volume that he put to work was probably too much. Now he sees a $13,000 day. This is exactly what I was expecting, that you're going to get all the immature money swung out of the market, just pushed off the sidelines. Is that what you're seeing?
Yeah, exactly. I mean, it's the same story every cycle, every market, right? You got people that get excited and come in and they think, that they're going to become millionaires overnight. And it's just not the way it works. And so again, they come in over positioned, their size is much too large. And at the end of the day, something I talk about all the time is that, we're human beings, and as human beings, the reality is that we are emotional. That's what makes us human beings. That's what's great about being humans. But if we're honest about it and we look in our own lives, very few of us are actually composed emotionally in our regular lives. And you can't be one way in one area of your life and expect to be the opposite way in another area. You're going to follow through with the same thing throughout. And so when you get into, into trading, into the markets, and you come in because you don't know what you're doing, of course, that nobody, I don't know anybody that's ever come in with some kind of educational understanding, right? Everybody just kind of fumbles in because they want to make money, and then they learn as they go. And so you come in and you don't know what you're doing, and your position size is too large, but you don't know that. You're not using any kind of risk management, but you don't know that that's required. And all this kind of comes in, and that just exasperates all those emotions so much more. And so when you have the bigger drawdowns, all you want to do is get the hell out. All you want to do is get up, just be like, man, and hopefully not lose your butt in the process. But yeah, it's unfortunately it's what retail traders, when they come in, what they're going through all the time. The gentleman we're talking about, no, it's nothing special. It's the same thing. The thing I like to tell people is, listen, you're not special. If that's what you're doing, you're not special. It's okay not to be special.
Right.
You're doing what everybody else does when they come in. Now, the important thing is to understand that and then go, okay, now I have to make a decision. Either I need to get out and stay out, or if I'm serious about being in here, I need to actually start learning. I need to figure out what I need to do so that I can get comfortable with it, because fear in general just comes from unknowns, right? We're fearful of things that we don't know. And so when you're in the market and prices starting to rally and take off, there's FOMO, fear of missing out, right? Because you don't know what's going on, but you're afraid that you're going to miss out if you don't jump in. Or if price is dumping and everybody, it's moving fast, you're like, oh, I just need to get out. You don't know why it's doing or where it's logically headed. And so all that fear just materializes and just jumps up on itself and makes it really difficult for, somebody to come in and to, to just kind of have any kind of real continuation with the markets, unfortunately.
Yeah. Can you pop up one of your charts and maybe we just show the audience like what's been going on and the kind of movements? I mean, there is a lot of swings in this market that I don't think happens in a Southwest Airlines stock or a Continental or a Exxon Mobil, right? You don't get this type of emotional response from these very mature equities. This is more akin to, very violent commodities, right? Well, aluminum or a copper run or a crude oil short or long, right? Wouldn't you agree that this is a very different, for people who's traded equities and not traded commodities, this is a different beast. You can say it's Bitcoin, but the truth is it trades like commodity. Is that a fair assessment?
Yeah, and that was the thing when I came in 2017, in January of 2017. That was a lot of what was being talked about at the time is, okay, well, what is Bitcoin? How does it trade? And, the consensus that I came to, and it seemed like some other people came to, was that the idea that Bitcoin is trading more like a commodity. And so, when you look at that, now there's some, there's some caveats here, because there was the crazy mania during the pandemic where we had GME and AMC and these kind of stocks trading like Bitcoin, like crypto. But in general, especially up to that point, No, there's the market itself it works the same way. It works by the same principles. You know, um, you can use technical analysis the same way, but it's a lot more volatile. It's a lot, it moves a lot faster and a lot larger than what anybody might be used to. So me coming in, having traded futures, having traded equities, having traded Forex and all these things, that was the only, I can't say no, but that was the big difference. That was the big difference. It just moved harder, right? So I think if you're emotional,
You mean the
again,
swings are more violent?
yeah, yeah. And so when you're emotional, it just really wreaks havoc more so than what it might normally do in another market. And so, again, you get these big pullbacks, and you'll get them sometimes with equities and whatnot. You get them sometimes, but it's not like the norm, right? Whereas in crypto, it is the norm. Crypto is this big rally, big pullback, big rally, big pullback. So, yeah, there is that difference. In understanding and mindset, I think when you get into crypto versus say, with stocks or something like that.
Walk us through this chart. What is this telling us, and what's the time frame?
So this is the daily chart right here. And so what I'm looking at, basically, let me take off everything else. At the end of the day, what we have are higher highs and higher lows. So we've got a high, we've got a low, we've got a higher high, higher low, higher high, higher. We keep going up like this. So as long as we continue to do that, I mean, this trend is up on the daily here. Even right now, we pulled back into just this kind of this congestion here, and then of course we had this drawdown, this wick down. But again, this was the last higher low here. Then we had a higher high, and we may be printing a higher low here. So the first thing I'm looking at is, okay, our trend is up. It remains up. Even though we've had, a 17% drawdown, we still haven't broken the last higher low.
What would that number be? I can't see the number.
On this chart here, yeah, on this chart, it's 59,224 and 68 cents. And this is the Bitcoin USD Coinbase chart.
Yeah, this is the point I keep making, that we just blew through the 50s at 48. We ripped right. I think we stopped at 52 for like 5 minutes, and then we just ripped right to 57, and we've never returned there, right? We just went straight through the 60. I think your point is, yeah, no volume ever traded in the 50s. Even on the downside, coming from 69,000 3 years ago, it just ripped right through the 50s and went into the 40s, right? So we didn't really revisit that space. Kind of surprised me a little bit, but it makes sense if we never spent any time there before. Yeah. We have spent a lot of time at this level between 61 and 64, correct?
Yes. Yeah. Yeah. And so, I mean, we can even zoom out here a bit to the, let me zoom out to the weekly here to get us a little better look. There we go.
Yeah.
Yeah. And so
I love this chart, by the way. This is a beautiful chart to me.
Oh man, yeah, it's absolutely great here. And this is volume by price level. So this is volume on the bottom here by time. So this is the weekly. So every one of these candles is a week. And this tells all the volume that happened in that week. And then this over here is the volume at the different price levels for what's on the chart here. So going back to, what is this? The week of May 4th of 2020. This is all the volume that's happened in the market on this chart. And, again, you can see where you get these higher volume nodes where the market is much more interested. And then you get these lower volume nodes right here, 53 right there, where the market is just absolutely not interested right there. And so, this is kind of what we look for. And generally speaking, what you get when you look at this, you see we've got this rally up, and it hits this low volume node, and it pulls back, and then it just fires through it. So there's not a lot of interest there. So if price is going to move through it, whether it's up or down, it's going to usually move through pretty quickly. When you get to these higher volume nodes here, where you have a lot more activity, where the market is really interested, that's what it's telling you. The market participants are really interested in that level. And that's where you're going to, when you get up in there, you're going to see a lot more of that buying and selling going on. And so it kind of takes more time, goes sideways a bit. So yeah, when you're talking about that 52, 53 area here, here going all the way back here to February of 21, when we first kind of reached up in there, we've just really not spent any time there overall. And so again, it kind of hit it. It gets rejected initially 1 week there, and then boom, pops right through it. And that's kind of where it. And so we get up to the blue sky area up here, beyond the all-time high. and there's nobody, there is no level up there where the market said, we're interested at this level. So at first you kind of get this pullback, this kind of rejection,
Disbelief,
because
huh? A disbelief.
yeah, because we got to think about it this way, right? If you're buying, right, let's say you're buying in size, and you're buying in size on the market itself, maybe not OTC, right, over the counter. What happens is, if you're buying on size and there's no real kind of interest area where the market's really interested, where you're going to have people that are willing to sell to you, if you're coming in, you're going to chase that price up. You're going to, if you're buying, you don't want to be buying here all the way up through here, from 52 up to 62. But that's, and so usually you'll get this kind of pullback here first as you get in there and start picking up some more demand back down the, below that all-time high. And then you'll go into it, and then it just chases price up. But, again, if you're a bigger player and you're trying to get in with a little bit of size, the last thing you want to do is enter one of these low volume node areas with a big order, because there's nobody there to buy it, basically. And so you got to chase price up.
There's no one there to sell it. Yeah.
Yeah.
And so it just gaps.
Yeah.
So this is a really interesting question. And I'm so glad you went to, hey, what happens after this? Because we're in no man's land, right? We've never tested any of these numbers.
Right.
If you believe the ETF supply demand crunch, they don't really care about the price, right? They're going to buy the asset. I mean, I keep using the Rolls Royce as the example. 6,000 $500,000 cars a year are sold brand new to rich people. And this is at 62 grand. They won't care about 62 grand.
Yeah.
Or 620 grand. Quite frankly, they will not care. And I'm pretty certain that the real money is yet to come into Bitcoin. How do we get comfortable? How do I get comfortable buying 64 here, knowing that we're getting ready to enter either the 40s, because it's not going to sit in the 50s very long, or we have to go north?
Again, a lot of that comes just from understanding. So, and you've got two things at play here. You want to understand Bitcoin. You want to understand why the hell is Michael Saylor out there, selling these convertible senior notes here over and over and over again. I think he did like 1.2, 1.3 billion over the last few weeks, something like that. And you want to wonder why he's doing. Then you want to look at, okay, well, why is Larry Fink over at BlackRock pushing it so hard? Why is there so much money flowing in these ETFs, right? And so the first thing is, you've got to understand, well, what is Bitcoin? What is it doing? And probably more importantly than that, what are the people involved with it that are buying it? Can you understand maybe why they're buying that? Right. Because a lot of times it isn't about what the asset is. It's about, well, what do people think? Because again, the market is just, just what we're seeing here is this visual representation of this movement between fear and greed in the aggregate, right? That's all markets are. It's all emotional. We think logically, and we try to give logical reasons afterward for why we did something. But at the end of the day, much like everything else in our life, we tend to buy and sell emotionally. And so, if you're trying to get in, I think the first thing is you got to figure out, okay, well, what is it that I'm buying? What is it that people that are buying this, why are they buying it? What are they thinking? And then you have the other side of it, which is, okay, well, how do markets generally work? How and why do they really move? Which again is where we go back to what I was just talking about with emotions and, these big emotional drivers. And because it's emotions, and human beings tend to act and react in the same way generally. Nothing's ever exact, but human beings tend to work. The way I like to talk about it is, so as human beings, whatever normal is these days, right? But normal human being, you've got this flat level that you're at. And throughout your day, throughout your life, you're going to get these really excitable moments and these really depressive moments. Maybe you win the lottery, maybe you win 100 grand in the lottery, you move above that neutral level, but you always kind of come back, right? And a family member passes away, very sad. So you move down, but time heals all wounds. You eventually move back to this neutral, and that makes what humans do basically forecastable. Now, that doesn't mean that, that you're always going to get it right in the markets. But what it means is now you have a point of reference. Now you have something you can look at and go, okay, so if human beings are kind of forecastable, if they're kind of predictable in what they do, well, now I got to figure out, okay, well, how can I understand that in the charts? And so, I think those are the two things that really, if you're serious about being in a market for some extended period of time, I think you do that, because once you figure those two things out, you're going to have a lot less emotion. It's not ever going to completely go away. I've been doing this, almost 30 years, still get emotional sometimes, but you learn to notice it, and you learn to, protect yourself against it with, proper risk management.
Yeah, it was interesting. You and I were on a show last night, I think, and a young man talked about, he's like, man, I'm about to puke here. I've lost $10,000. I can't imagine what Cardone feels like. He's, probably had a multi-million-dollar loss today. It doesn't really, I mean, I don't, that guy should just not look at the chart, right? If it's going to bug him that much. In fact, he said, hey, I just bought TradingView. And I'm like, why would you buy TradingView with half a Bitcoin? Like, you need to go to work, man. Go find a job so you can buy more Bitcoin. Now look, do I like having a multi-million-dollar day down? No, but hey, let's talk about the multi-million-dollar days up too, right? You can't have one without having the other. Like it's just part of the deal. And I look back at this and go, hey, for 15 years, everyone that's invested in Bitcoin has had this same experience.
Yeah.
Okay. This is just this is the cost of being in this club. It's never overly stable, right? You have I think it's actually going to become more stable in the next 18 months. And I love your views on this, because this is a market sentiment thing to me that's really important about, is it more violent in the next 18 months as more mature money moves in here, or is it less violent? And if it's more violent, I think people are ill prepared for what's getting ready to come. If I'm right, it's going to be more violent. Your thoughts?
Yeah. So, I've been talking about since I came in 2017, and, was hearing everything that everybody was kind of talking about with Bitcoin, and their thoughts and reasons why to have it and whatnot. And the idea that it would go up higher, and, and the idea that, Bitcoin is money. And one of the things I had been talking about a long time was, well, listen, if it's going to be taken seriously as some form of currency, it has to stabilize a bit. You can't have these wide swings, because, somebody gets paid, their salary today, and tomorrow it's down 20%, that isn't conducive for them to use it as currency. And so I said, in order for that to happen, what needs to happen is we need to get to a certain level. You've got to get up, 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 up. And because what happens is, as you get up higher, going back to what you were saying a bit ago about, the wealthy, and, and then the cars, and the 60,000, 600,000 and whatnot. I mean, the fact of the matter is, these are people who, they're going to put in, and they're going to stick in for a while. Right. And so if you're in for a while, more of that supplies off, which, kind of helps stabilize it at some point, or stabilize it more, I guess you could say. But until you get to that point, as you're getting up there, you're going to probably see a lot more volatility, especially as you hit those certain levels. So you kind of jump into the 100,000, maybe jump up to 200,000, up to, 4 or 500,000. You've got these levels, and as people that have a significant amount of wealth, right? They're not interested in what retail may think is a high price, right? So your average Joe goes out and goes, man, $60,000. I've got $10,000 to put in, and all I can buy is 1/6 of a Bitcoin. Now I'm going to put in some shitcoin where I can have 10 billion of them. Well, because that makes them feel better, right? It makes them feel wealthier because they have a bigger number of them. But it's as your pricing is getting higher up, then it becomes more interesting, right? The RIAs, the bigger RIAs, the ones that are allocating on behalf of their clients, start going, okay, now we're over 100 grand. Now we're over 200 grand. Okay, now we've got some size, a little bit of size to it. Now we can start kind of taking some little bites here, and then we start testing it out a bit. But we're not interested below that, because our level is so high that it doesn't make sense for us. It's chicken scratch. And so, retail, unfortunately, views the world through, well, you know, we all do. We view the world through our own lens, which is our socioeconomic status. And for if you're retail, that makes this price look really high. It makes the idea of 100,000 seem just like ridiculous, or 500,000. And that's why I always then return back to percentages. Let's look at percentages. You know, again, if we're rallying from here, we're at 64,000 right now. 50% from here, you know, it takes you up there to 100,000, right? It's only 50%. We just dropped, you know, almost 20% in a few days. You know, almost half that. So it's not that difficult to do for Bitcoin. But you know, again, if you're coming in, you're an average Joe, you're coming in and you're looking at markets, and it seems expensive to you. And 1/10 of what is probably the world's greatest asset, you know, or 1/6 of it seems like nothing when you compare it to, you know, 100,000 or 1,000,000 of some shitcoin, because again, you feel just better because you have 1,000,000 of them versus a sixth. But again, that goes back to the educational part. You know, you're not educating yourself for it.
Yeah, that's always been a very odd mental construct to me. That's like saying that, you know, I want to buy a Range Rover. Range Rover now is, you know, well over 100 grand, but instead I'm going to buy two smaller SUVs, right? That won't hold their value. It's just weird to me. Like, why would I buy? It's like going to the worst bar on the strip in New Orleans because the price is right, versus, hey, I saved 50 cents, but I'm walking into, you know, I'm going to pay an extra 50 cents, but I'm actually not going to get knocked out. My credit card's not going to get stolen. My phone's going to remain with me.
Yeah.
It's a very weird. I just think it really shows the lack of education for most people
100%.
on money.
Yeah.
Just money, man. Like, people think about, I remember a man told me once, he said, you know, I've known people my whole life that know the price of everything down to a penny and the value of nothing. I think some famous guy made that quote, but it is most definitely true in the digital asset world.
Yeah.
People chase Bobo over a Bitcoin. I'm like, man, I don't know what Bobo does, but I'm pretty sure it's not Bitcoin. You know, you made a comment about the RIAs. I heard the guys at Bloomberg today talking about some of these investment guys are unloading the positions they already put on because it's a 40% increase.
Mhm.
It's hard for me to believe that somebody would have put an investor into Bitcoin 2 months ago at 32, and they're already rolling them out at 100% margin. Does that make sense to you? I mean, I
Yeah,
think these
no,
guys are really good, but every now and then I think some of I don't see that happening. Why would you get out of a trade that you're up 50% on when you're advising someone professionally? I don't
yeah.
get that it seems very reflexive, right? Very reactive.
Right. Yeah, and I mean, when we look at that, you know, I think the big thing is that we had the single largest outflow day, I believe, yesterday for ETFs at 600 and, or no, it was like 630 million or something.
Yeah,
I don't remember.
626 million, I think. Yeah.
But at the end of the day, it was what, the third or fourth outflow day only in the last 2 months. Every other day, you know, for 60 days has been, you know, net positive, has been inflows. So I don't think, I don't think that's necessary. I mean, you can have, you know, again, I think when we look at it, the level we're at, I think is the very bottom of that next kind of wealth level. And, you know, I think you're going to have more maybe individual, higher net worth individuals who are, you know, in those ETFs that maybe are selling, maybe. But I think the idea that an RIA would get you in and then, you know, just 2 months later, before this thing's even really getting going, is going to pull you out. It doesn't make a whole lot of sense to me. Obviously, I can't say that's definitely not happening, but I think those RIAs probably should be shot. Because what the hell are you doing then? You know, are you getting, you know, management fees from getting in and out? I mean, is that what it is?
I wouldn't have
But
thought so. I wouldn't have thought so. I
yeah,
mean,
and
they're going to look like they clearly don't understand Bitcoin.
yeah, yeah, and But see, that's the big thing though. That's the thing that I'm hearing and that I'm seeing that other people are hearing as well. With the larger RIAs, the ones, that are really that will potentially allocate quite a bit for their clients, is that they don't really know anything about it. One of my favorite follows, the Bitwise people, man.
Yeah,
These
I
guys
agree.
are absolutely fantastic. I love them to death, man. I follow so many of them. But they're out there with the outreach to the community. They're explaining things. Teddy's out there doing, explaining how ETFs are bought and sold with their specific example, with Bitwise. And then,
This is the Hunter Horsley's group, right?
yeah, yeah.
Yeah, I like them a lot.
Oh, it's fantastic. And they go out there and they let us know what they're doing. And they go on, he's like, listen, I'm on this road show. I'm 16 days in. We had all this interest, but nobody really knew what Bitcoin was. And but they were wanting to learn. And so, if you're an RIA, and you're allocating money on behalf of your clients, you're not going to do it into something that you don't know. So it takes time. It takes time to learn. And I think a lot of people that are already in Bitcoin forget about that because they've been in. They sit in on X all day long, and it becomes this big echo chamber where it seems like
Right.
everybody and their grandmother knows about it. But when you actually step out and you go outside, it's like, not really. Bitcoin did this, and people are like, what's Bitcoin? And so,
Yeah, dude, I was with two lawyers yesterday for 2 hours who they've known me now for almost 4 years. They've seen me go through a really brutal legal thing. And I was holding a lot of Bitcoin. The head lawyer looked at me and said, well, Gary, did you recover from your losses? And I'm like, did I recover? I mean, no one is paying attention to Bitcoin today.
yeah,
No one. He's still talking about his bonds. Okay. Like we are really very early, I think, which lends me to this is my thesis. My thesis is 60 to 64 is the new base level. We're going to look back at this. Could we go down to 40 for 12 hours? I'm sure we can. We could probably go down to 25 if we have a nuclear event. S&P falls 50% like Garrett's worried about. I don't think the government's going to allow the S&P to fall 50%. They'll just stop it. They'll circuit break everything. Not pre-election. There's no way, right?
right.
I think we're farming a base here. We're not farming a ceiling. We are farming a base. I think that's my base thesis is that this is really, really healthy.
Yeah. Yeah, and that's again, as I was referring to earlier, it's usually a lot of times what we'll see with all-time highs. People want to just hit the all-time high and then take off like a scalded cat, but it happens sometimes, but most of the time it doesn't. Most of the time, it's a peek out into it, like you're a gopher sticking your head out of the hole, and then you pull back in and you make preparations to go, to actually leave the hole and head out there and explore. And I think that's kind of the same thing that we generally tend to see in markets when we hit all-time highs. Unfortunately, again, the retail trader comes in and they get excited with the new all-time high and the prospects of going higher. But when they get in, it's this idea of, oh my God, if it even starts coming against me a little bit, I'm going to start freaking out, man. And so, that's kind of what we get to. And then, you have everybody else freaking out. Again, the outflows, the ETF outflows, I've got a lot of messages about that overnight into this morning, kind of asking you, what happened to ETF? I thought it was going, what happened to all the buying? And I'm like, listen, guys, this is the third or fourth net outflow day that we've had in 60 days. I think we're doing pretty all right. But, and a lot of that outflow right now recently, again, is coming from GBTC. I think they knew this was coming, which is why they kept their management fee up there at 1.5. Their assets under management are still around the same as what it was prior to all this huge, what they have like, I don't even remember how much on the outflows they had. It's been absolutely ridiculous. But assets under management still doing, still up there. So, I think it's just, again, it's education, right? It's
Yeah.
getting out of your worldview at whatever socioeconomic level you're at, and kind of understanding that your worldview is tapered by that, by your situation, And kind of once you can recognize that, understand that, then you can start looking out and going, okay, well, what is really possible? But until you do it, it's just, man, it's just hell on your emotions.
Yeah. Well, you've been through the pre-halving before and the post-halving. What do you think? You got any ideas on pre-halving here? We're about a full month away, right?
Yeah.
We're also a month away from tax season, April 15th, which most people have already extended. I've never done the April. I always extend. So
Always
yeah,
October.
exactly. Do you think either tax preparation moment and or the pre-halving, we have an incident that brings us down as we have done before?
I mean, it's possible. Um, I think again the situation is a bit different here. If we hadn't hit a new all-time high prior, if we just been reject like we normally are, I'd say okay, yeah, we're going to follow that. But I think this is a wrench into what we're doing now. This whole new hitting the new all-time high prior. I mean, we hit it well over a month prior to having happening, and so I don't. It could happen, sure, but I don't know that I would necessarily look back on everything that's maybe happened before and say, okay, that's going to happen again at this point. I think you just kind of you keep your mind open to the possibility, but really, as long as we continue with the higher highs and higher lows, especially if you're zooming out to like the weekly, I mean, as long as your trend's doing that, there's little reason to really be looking lower. And so, returning to your comment about the gentleman who was looking at the price and everything, after having just gotten in, with the bigger position a little bit higher up or lower down or whatever it was. Um, yeah, that's the thing. Unfortunately, when we come in, they want to know, how rich am I getting today? How much wealthier am I today? And even if their time frame is, multi years out, they sit there and they still look at it daily. But like you're saying, they shouldn't be. I mean, if I could say the one thing here, if your goal is actually to collect Bitcoin, as much Bitcoin as possible, say for the next year, you buy in, you go out, and you find some way to make extra money. Yeah, this is my
Dude,
lawn mowing comment I made a few weeks back, right?
mow a lawn, dude.
Hold on, do something, right? I had a friend just send me $40 in Cash App to pay back something. And I'm like, oh, just put that right in Bitcoin, right? And so it's like anytime I'm coming across extra money for me, which is a little bit extra money, I'm just throwing that into Bitcoin and trying to find a way to to get more of that. Because we always find out we're never allocated enough when price goes higher, no matter how deep you're in. No matter how much you put in, how many millions you put in, you still, as price goes up, you're still going to feel like, if only I had been able to do, this little bit much more. And so that's I think it's kind of a unique thing with Bitcoin as well, when we're kind of involved with it.
Can you imagine that cycle breaking where all you have to do is hold it for 4 years and you will be in the money at some point? Does that break down? And if it does break down, I mean, I'm not talking 40 years from now, but in the next, say, two halving cycles, could you see all of that break down?
Um, yeah, but I think that would be something along the lines of some really, so some kind of Great Depression kind of thing.
Right.
I think if it's just normal, I say normal, but recessions, even the Great Financial Crisis, that didn't last long, right? We topped out in 2008, stock market bottomed out in March of 2009, and we went back up, right? And so, I don't think that that's really there unless we're getting some really substantial. We did it in 1929, and again, it took like 25 years, 1954, 55, to get back up to that all-time high again. I think that would be the only way that we kind of see that. Otherwise, your pullbacks are limited in duration. Your rallies are limited in duration. And so, with this kind of 4-year cycle thing that Bitcoin seems to be on, um, as long as that continues to happen, I don't see a reason why we wouldn't um, end up
Yeah.
like that.
Yeah, I'm with you. One last question. Post halving, do you see any remarkable, freaky things that would scare you about the post halving, or what do you see? What do you see maybe post halving, like into October, all through the summer? I think that you're going to have a bunch of investment advisors finally
Yeah.
has gone through their checks and balances, talked to the lawyers, got all the paperwork, got their glossy little brochure with the waiver in it. I am not responsible for this, right?
Yeah. Yeah.
That's 3 or 4 month procedure. Then we're into August. What
Yeah.
happens post halving? That's the kind of period I'm thinking of.
Yeah, yeah. So for me, rallying into the summer, and then I continue to think that as these RIAs do their due diligence, they learn about Bitcoin so that they actually have knowledge of this asset that they're going to potentially you know allocate to their clients' portfolios. That takes time. It takes months, right? Minimum of 90 days or so. And so I think, we're looking at maybe right before the summer. So maybe May, June, before we really even start seeing that kind of come in. And that comes back into that whole idea of, this is a whole nother wealth level. We're just at that very low end where it's a lot more still individual driven. But I think once you start getting into summer and after summer, the potential, I think, is strongly there for those bigger RIs who are allocating on behalf of their high net worth, ultra high net worth, and clients. That money starts coming in, and you know people say, "Oh, well, the halving doesn't matter because there's still supply out there." Well, yeah, there's supply out there, but look at how much supply has been gobbled up in just the last 2 months from just BlackRock alone. Forget all the all 10 ETFs,
Right.
and then you got Sailor out there again, 1.2, 1.3 billion in the last few weeks that they've deployed into that, bringing in more Bitcoin, right? And this is something that's being held, off the market. And so what happens when you get to halving? Well, yeah, you still got some supply out there, but the supply that's coming in is halved now, and that becomes exponentially important if we see what we're thinking here, which is these bigger RIAs with a higher net worth individual to high net worth kind of allocating, summer into Q3, Q4 of next year. And so that gets kind of interesting because back in the beginning, I've been talking about this idea that that the rally that we're getting seemed more like 2013 versus what everybody else was looking at, which was 2015. And 2013 had kind of like this double top or a double pump, I guess you could say. It was up, it pulled back, and then it went up even higher before it was finally done with that cycle. And Willie Woo, Woonomics, I think is his Twitter his Twitter tag there, X, whatever it's called these days. But anyway, he just happened to post something about that the other day, and I went ahead and reposted that. And I think that starts looking really interesting. I mean, everything is lining up like we've got, what cycle theorists kind of give this left translated cycle, which just basically means everything's happening sooner. And if that's the case, you'd be looking for the market to top out Q3, maybe Q4 of next year or of this year. But, then there's the whole idea of the super cycle. Are we just now starting to get into the real money coming in? And, honestly, we're only 2 months into the ETF. So, we don't know for sure. But with what we're seeing so far, if we continue to see this, through the summer into the end of summer, beginning of fall, to me, I think there's a lot to be said for the idea of maybe more of a super cycle where we get this big move, which could be this double pump kind of cycle going on. And so, for me, I'm interested in the ETFs in terms of how do the flows continue into summer, and then as we get through summer. And for me, that'll tell me a lot more about potentially what we see as far as Bitcoin goes. And I'll tell you what, if we get that, I mean, I don't think anybody's even really prepared for that. I don't think I am. I don't think you are. I don't think Michael Saylor is. It would just be something so significant bringing it in there. So
Well,
Yeah,
well,
that's what I'm kind of waiting for.
the thing I know is and that kid made me think about it the other night when he said, I can't imagine what, somebody with multi-million-dollar swings feels like. And it's like, well, when you look at it, you're just reminded to be humbled.
Yeah.
Okay. Be humble to a market because the markets can tear your face off. I mean, I think what we learned two things here. One is Bitcoin is not going to take off like a scolded cat. Okay, that's my new Chris Ings term. I love that. I'm gonna post the hell out of that today on X. Um, you talked a little bit about real money coming into the space. Um, I have my brother's very seriously into real estate, dude. I think there's so much capital sitting on the sidelines.
Yeah.
He told me that he on $150 million capital deals for big real estate apartment buildings. There were like 8 bidders. On $75 million projects, there were 57 walkthroughs. No,
Wow.
75 walkthroughs,
Yeah.
8 bids, 57 people sitting in line. That's $75 million. So those families have somewhere between 13 and $20 million in capital. They go to the bank, they get a loan for 5.5%, which we were saying just 3 months ago was impossible.
Yeah.
5.5% money's all over the place. Sailors borrowing money at 0.85. There's money everywhere, man.
Yeah.
And to Grant's point, because he's not a big Bitcoiner, but we're just looking at, hey, where's the money, right?
Yeah.
To Grant's point, I like there's so much money sitting out here that's looking for yield that's not managed by professionals.
Yep.
And I think this whole real estate market, they want a yield, right? That's something that Bitcoin cannot currently offer. But the moment it does offer a proper yield without like tax issues and man, I just think you're going to see a lot of real estate people go, hey, this is a lot easier to manage than having 100 people in a room. I mean, in rooms, I've got to manage roofs, I've got insurance, I've got to compete.
Yep.
I don't think we've seen the real money. That's why I would suggest that this 64, this is going to be the new kind of baseline. Could we go below that? I mean, I bought at 72, doesn't bother me at all. I have a weekly allocation, and I'd probably pick some up right here. I would feel really comfortable here.
Yeah. Yeah.
Anyway, I just wanted to share that about the amount of money looking for real estate because I was quite surprised. And this is not BlackRock, man. This is Joe Regular, right?
Yeah.
So they've been studying real estate for probably a decade, trying to be like my brother for a decade. And now they have an opportunity because the funds aren't buying any of this stuff. They're trying to dump it right now. Yeah. So any closing comments? And I know that you're doing something right now. You're running a program to really help people. I'd like you to feel free to advertise that or discuss that a little bit so people know where to follow you.
Yeah, great. So, at the end of the day, this is a pullback. There's nothing that's actually contrary to what a lot of the big influencers are saying, some of them online, there's nothing technically happening in what we're seeing here that says this is the top, that the cycle's done, that we're going way back down, to 15 or something like that. It's a pullback. Might it pull back more? Sure. But I think what I think I notice mostly from people trying to enter is there's more regret on missing out in an entry and price taking off without you than there is buying and having to hold for it to come down a bit and then it goes up. And I think that's kind of, when people are coming in, again, it's most traders that get in here or even investors, retail, and they expect that when they buy that's the low, that it's never going to go negative on them, that it'll always go up. And that's just kind of setting yourself up for for a big emotional loss right there. So just understand that, where you're getting in here, do some research, understand what Bitcoin is, try and understand why people are investing so much into it, right? It doesn't mean you have to agree with them, but you need to understand, because as long as they feel that way, they're going to continue doing the thing they're doing. As long as they continue doing the thing they're doing in such large swaths, price is generally going to continue higher. And so, I think that's probably the biggest thing. The other thing about that, it just comes down to, risk management. You absolutely have to have it. If you're getting into the market, you have to understand what proper risk management is, and then you have to do it every single time. Because here's the thing, you can get in there and you can have 10 great trades in a row and make all this money. In that 11th trade, no risk management or very poor risk management, you can lose it all and more.
That's
I've
right.
seen it happen so many times, year after year, over almost 30 years now. Sometimes that was me at the beginning. That was me. I made all these same mistakes, everybody else makes at the beginning. So, again, so what we do at the Trading Academy, at TWC Trading Academy, Texas West Capital, is that we focus on group coaching. That's our big thing. We do multiple sessions a week, but the goal of it all starts and ends with risk management, proper risk management. We teach you how to trade the market, not just how to trade, but how do you actually trade the market so that that you can increase your odds of success. And so in doing that, we teach you how and why the market actually moves. We teach you all about the emotions that human beings do and how that drives the market. We teach you how to understand that with proper price action and volume analysis. And then we give you the tools, Elliott wave theory, Wyckoff method, price action, so that you can day trade or even forecast price action, because that forecasting is what's going to make you wealthy. It's not your day trading. You're day trading for income, folks. Let me just tell you right now, everybody on social media wants to scalp and day trade. You're not. The odds are significantly against you that you will ever create wealth day trading. You can do income, though. You can make income like a job. Me, I got tired of trading all day, every day. And so for me,
Chris, I was just getting ready to ask you. I mean, maybe I'm doing the wrong thing. I haven't day traded in 25 years. Am I making a mistake?
No. Day trading is the thing that, again, it's that idea that you can come in and make a whole bunch of money really quick. And you can get on some good trades and all, especially if you know what you're doing. But at the end of the day, I think the best way for most people to look at day trading when they first get into it is it's income. Make $100 a day, $500 a day, whatever, depends on what your capital account is. But if you really want to build wealth, then what we teach is more comprehensive. It blows away anything else out there. I've spent a lot of time the last year and a half constantly marking bottoms and telling people about them. We had Bitcoin down at 15.5. We had Sol at $9.5. We had Link at $5.5. We had PayPal. Actually, the day of the day I posted on there was its bottom there. And so I've done this just to kind of show people, listen, what we do, what we teach really works. So what we've done now is, our group coaching is a bit expensive because it's a lot of hours, a lot of work on my end. But we've offered a new.
What's expensive look like?
For most retail, it's $39.97, $3,997 for a year. Now, again, price and value.
That's $10 a day.
About that, yeah, that sounds about right.
For a trading, how much you pay to go to a gym?
Exactly, right. Again, it's price versus value, right?
Starbucks coffee cost me $7.
Is it even that cheap anymore? I don't know. I don't drink coffee, but
that's probably true, actually.
In law school, everybody drank Starbucks. So, but yeah, so I mean, realistically, it's a really great price point because you can invest that, and as long as you put in the focus, the discipline, the consistency, and the patience, you can use it to do really well. We've got a lot of success stories that I've shared, but some people are still not sure about it, or they come from another country where it is a bit more because their value of their currency is so much less than the US. And so we now offer a monthly thing, which we do, which is, it's our C3 subscription. It's $97 a month, and you get the same courses. You get the same daily updated charts. You get the same hot takes, which are just the absolute best stock and crypto charts that I come across during the month. And you get a group coaching session as well once a month. So we even still stick a little bit of group coaching in there to kind of help you out a bit. But if you're wondering if maybe the group coaching is really worth it, you can get in on that more inexpensive one to do it. Or if that's all you want, if you're more of a do-it-yourself kind of person with a little bit of hand holding, you can do that as well. So just trying to give people options, that they can work with out there. But at the end of the day, again, what we teach can definitely be used for day trading income. But the biggest, most important thing that I really push is this understanding of how and why markets move the way they do, how to figure out when we may be topping or bottoming, especially in a more macro sense. Because again, if you got in at 16 to 20,000 in Bitcoin at 60,000, your price has rallied 300%, right? And as it continues going higher, that increase, that profit potential is exponentially greater than if you got in at 30, or if you got in at 50, or if you got in at 70. And so, again, being able to figure these things out and understand that tops and bottoms are processes. The highest price, the lowest price are just events, but everybody wants to chase the event. Everybody wants the highest, lowest price. But when you start learning that they're processes and there's a way that they play out, it gives you a little bit more of a range, and you can feel more comfortable getting in. And that's the goal, to get you in there, to give you the understanding, to give you the tools, to get you more comfortable with it, with proper risk management. So that way, even when you do take a loss, because you're going to take losses, you're never going to be 100%. Doing this 30 years, I still lose. But proper risk management makes that loss like nothing, And so there is a proper way to approach the markets, and it goes beyond just understanding how to use Elliott wave, or how to use Wyckoff, or how to use price action. There's a way to actually approach the market that's going to lead to your actually greater success in that.
Yeah, with some real sense about you. It'd be like walking into a gunfight and not having any training.
Yeah,
This is exactly what a lot of these guys do, right? Why do they train in military? They train so when bullets start flying, you just go into training mode. Like you just go into, okay, I'm an automatic. It's very problematic to do, very challenging to do when you got to go talk to your wife and go, hey, we lost 3 mil today, man. My
Yeah.
P&L's down 3 or 4 or 5 mil, right? Or 30 grand or 3 grand. It's all
Yeah.
relevant. Chris, you're awesome, dude. I love working with you. You guys, if you're not following this cat, you should do. He's not shilling coins. He's not I mean, I don't think you are. Just validate it, please. But
Yeah, no,
I
never.
really like the cat, and he's been around the space a long time, been around commodities and equities. You would do yourself a disservice not to follow him. So thank you, Chris, so much. Love doing this with you. And
Always
any
a great time.
comments other than the scolded cat?
No, man. I think that's a good one to leave you with here. I don't want to give them all to you all at once.
I love people from Texas because we all have such great quotes, man. Texas and the guys in England. Love you so much, bro.
All
Talk
right,
to you.
man.
Okay.
Appreciate it. Thanks.
Ciao.